Hey there traders, welcome back for episode 68 from the StockBandit.tv. I'm always glad that you made it and hope that you return often. Now, before we get going in this episode, I just want to point out a couple of things. First, if you happen to be watching this clip in another place that's not at www.thestockbandit.tv, then be sure and visit the site and bookmark it just in case. You can also subscribe to the RSS feed here at the site, and you can join our free email list for regular updates across the Stock Bandit network. Now, also, I want to remind you to be sure and select the full screen option when you're viewing the videos here, as that will give you the best clarity and image quality. All right, now with that out of the way, I want to talk about the importance of lower lows and lower highs. Now, we all know that lower lows and lower highs do constitute downtrends, and that's how you get a downtrend in place, is lower lows and lower highs. We all are familiar with that. But I want to take that a step further and really discuss the psychology that's associated with the downtrend, and particularly with the establishment of a lower low and a lower high. Now, right now we're at a spot where the market has made a big run, obviously off this March low, and it's now short-term range bound. What we've got is some channeling taking place in the NASDAQ and in the S&P 500. They're both moving sideways here and respecting short-term support down here, and they're also respecting short-term resistance up here. Now, that's common in each of those indices, and the lows of the past few weeks are still intact here, as are the highs, and I might add that is what constitutes the trading range there. But when you eyeball the charts of many individual stocks, such as this one, Fortune Brands, FO, you get a similar look across a lot of different stocks. Here's another one. This is HOG. And what I'm really pointing out here, both of these, by the way, are short positions that we're in over at the StockBandit.com. And when you start to eyeball these charts and take a look at the price action, you get a feel for the psychology, and you recognize how it can quickly shift to the negative. Now let's just take a look at this stock, for example. This is HOG. Big uptrend here, and then it rolled over, and then you saw this minor bounce attempt, and that's failing, and now we're getting another move down. So we've got one high in place right here and a lower high here. We also have a short-term low right here, which was actually undercut today slightly. So we've got a lower high and a lower low in place, and that is, of course, why I'm short this stock. But to get a lower low, let's just examine this a little bit here. There must be a low before it, obviously. So here's a lower low, here's the low that was in front of it. But I know that's obvious, but in conditions like these, that happens when prices take a dip from their recent highs like this. You get this pullback, and then as price pulls back, a lot of bulls or buyers who, let me zoom back out here, as price pulls back in this kind of fashion, they still recognize that this overall uptrend is still intact. So they recognize a chance to possibly buy this dip, and what they do is they step in, and they're conditioned to do this. Buyers within trends are conditioned to step in and buy every dip, and they might book some profits at higher levels, and they might reload on dips if they're trying to catch this entire move up. But what they're going to do is they're going to step in and buy this first dip usually. Now, typically that leads to a short-term bounce, which is what we saw here in HOG, but that minor bounce did not achieve a new high. In fact, it stopped way short of the previous high. So all these dip buyers right here are now all of a sudden thinking, uh-oh, my plan is not really panning out the way I had expected. So now what we have is a possible lower high in place, and if prices do in fact start to slide down and break the low of that initial dip, which they did today in this particular stock, all those dip buyers are now underwater. Even if you bought the low of this dip, you're now underwater. And so the mentality shifts big time, and those people did what they thought was wise, and they did what worked the whole way up during this entire uptrend. However, price is now starting to prove them wrong, because it's made a new lower low, and in doing so, it's also confirmed a lower high on the chart. And so as a result, they do stand to lose more money if they continue holding this stock on the long side. And knowing that they can exit and keep the damage minimized, they're going to become sellers at this point. And I'm not saying that this stock is going to go down tomorrow or the next day, but anyone who bought this dip is now losing money. And so that adds to the mentality that a shift is truly happening, and pretty soon a lot of traders who still have some inventory, who still own some shares of a stock like this, are going to start dumping it, and thus the lower low is formed. Now, we see a couple of good examples here with HOG and FO, as I mentioned, and there really are a lot others out there right now. If you look through the charts and you look through a lot of charts the way I do each night, the dip buyers now have additional motivation to sell shares, which perpetuates that stair-step price action on the downside. It's just the exact opposite of what happened on the way up with this stair-step type action on the way up. It's now possibly going to shift on the way down. And so that's how trends persist, and that's how they do form. So if you're a dip buyer, be very careful to be sure that that dip holds. When it doesn't, it's likely going to turn into a better short than a long as another leg lower begins. The failed dip truly does carry a lot of weight, no pun intended. All right, thanks again for joining me for this episode, and I hope that you enjoy the extended holiday weekend. I will be back soon with more videos, but until then, trade like a bandit.